Amelia Bordeaux, CEO and founder of Market Compass LLC, and then Deck Malarkey, Managing Director of Investment Strategic Research and Initiatives at SLC Management. Thanks a lot to both of you for coming on. Amelia, I'll start with you, and that is just are we expecting any surprises just in more general Fed policy terms or anything from Powell out of these minutes today?
I think he's been communicating very clearly lately. He just had the testimony yesterday. So I think what the market is looking for is any discussion ahead on monetary policy at the lower bound. If they're discussing targeting the yield curve or targeting more or giving more explicit forward guidance in terms of an inflation target or an unemployment rate. And also they had said that their economic forecasts, of course, were very uncertain, that there was no one single path for the economy. So I'm also looking to see if they discuss the risks, about a second wave and another wave of shutdowns, which we are starting to see in certain states across the United States. And whether or not they take up fiscal policy and what happens if there isn't another fiscal package passed.
And then, Deck, what are you looking for here just in terms of any sort of future path for policy or where they're at? Are you expecting to see a consensus? Are you really thinking there's going to be a pretty wide range of opinions and perceptions out of these notes?
No, I think the minutes will really support a very strong consensus because I guess the one thing that we have to keep in mind is there are stages to any policy cycle. And the stage that we're at right now is still somewhat the firefighting stage where the Fed inserted a lot of liquidity to stem and put a floor under markets and really make sure that credit was flowing. Eventually, we get to the recovery stage and then a decoupling stage. But while you're at this firefighting stage, I think you're just going to see a lot of confirmation in those minutes that everybody's on the same page. The one other thing that just to add to previous comments there was, I do think readers will be looking a little to see if the minutes hint anything about the policy review that's been going on for the last year. And the relevance there is on the inflation target. We've always had a 2% target. We haven't made it. And there's a consideration that should we use averaging, that if you're low for a couple of years, you allow inflation to run high so that over a cycle you average. There may be some hints at that, but that is something that they're expected to reveal in September either way.
Mm-hmm.
Amelia, that's an interesting point. What are you looking for in terms of that inflation component? Because we've been getting some pretty weak inflation readings lately. We've always said symmetric around that 2%. So what are you looking for on the inflation front out of these the minutes?
I think as, just the discussion of whether there'll be an inflation target moving forward in the forward guidance. So when you have monetary policy at the lower bound, this is a little bit similar to like back in 2012, what the Fed did was they had more explicit forward guidance about an inflation rate that they were targeting and an unemployment rate that they kind of were targeting. So we'll see if they're going to talk about moving to that. I don't think they'll move to that yet, but they'll probably start discussion around those two things for possibly September. And so that would be important. I think the thing that's most important here is the economic forecasts are just so uncertain, and we'll even see that most likely tomorrow with the payroll number, how those numbers, the situation with COVID here in the United States is so rapidly changing that these economic data that we're getting are almost really out of date by the time we get them, which also raises challenges, for the Fed and certainly their forecasting. So, we are, like your guest said, in the firefighting rounds, and we're staying in the firefighting rounds for the Fed. They can't back off that yet because just as, we may get employment numbers tomorrow or payrolls that show a positive gain, it's really uncertain. But if we do, those starting to see in some of the southern states that occurred after the employment survey took place. So, there's just so much uncertainty out there. The Fed really can't back off right now. And Powell almost is adopting a stance like Mario Draghi, the former ECB president, did during the Eurozone crisis, where he said he'll do everything it takes, and that's what Powell has been reiterating. The Fed will do whatever it can for as long as it can, to really back
And so, Deck, I think it's an interesting point. Do we need to get a lot of reassurance that Powell has the bazooka out, so to speak, for markets to not only maintain some of these gains, but have the potential to move higher?
No, I think markets are convinced, certainly equity markets, bond markets are convinced, and that he is all in and that the Fed is all in. And beyond that, all major central banks, all governments are pouring a lot of stimulus. So the backdrop is very supportive. And in fact, I would suggest that's one of the reasons there's just such a disconnect between Main Street and Wall Street on this recovery. The comment is always made, the S&P really got back in a hurry. Why is that happening when we're seeing such suffering and horrendous data? But the markets take their cue from fiscal stimulus and for fiscal easing, from monetary easing and easy fiscal conditions, and financial conditions, and that's happening. Whereas on the consumer economy side, you've got a lot of concern that the fiscal stimulus will not get extended beyond July. So there is but the key point is markets are taking a lot of insurance from the convictions on the Fed. And that hasn't wavered, and that's where we are right now. So the Fed has done a good job of assuring that they are going to be there, and also prodding Congress again tactfully to do all they can to support this recovery. And that's one thing that Powell has never lost an opportunity to do. In his comments yesterday, the same thing, is just urging Congress, you've got to help. You've got to help here with fiscal stimulus.